morning. Welcome to IG's early morning call. It's Friday. We've made it through to the end of another very interesting week on the markets. It's Friday, the 23rd of February. Let's take a look at the headlines as we wait the start of today's European session. We're looking for gains at the start in some of the markets. And the equity markets have seen record highs in the last 12 to 18 hours for the Dow, the S&P, the DAX, the French CAC 40, the Nikkei 225 on the 24-hour markets, although it's the Emperor's holiday today, a day off for the Japanese markets on the cash trading session, but we have had 24-hour markets continue to see upside. Take a look as well as what's been happening around the UK economy as we've seen the GfK consumer confidence number falling for the first time in 4 months. And the numbers coming through for earnings continue. Banks closing out the week's interesting numbers coming through from the likes of Barclays, Lloyds, HSBC. Today it's the turn of Standard Chartered. And once again, exposure to China is causing a little bit of concern for investors, despite the fact announced a £1 billion share buyback program, also a rise in dividends. Take a look at volatility, a little move going into the last trading day of the week. There really is not much to bite on, if I'm honest with you, in the session today. And as you'll see, the market's holding on to recent gains. There's a little bit of a red candle, but we're not too far away at 76.89 from where we were at the cash close yesterday. So I'm not expecting great fireworks at the beginning of today's session. But it's been an interesting 12, 14, 18 hours or so on the German market. So got this push higher we saw yesterday to an all-time new record high. 24-hour markets go up to 17,448. And again, like the London markets, we've been seeing a little bit of a retracement of that, but it just takes us back to the cash close as of the close of yesterday's session. Same sort of thing in the French markets as well. Big strong candle yesterday, pretty much closing out the 24-hour markets at the top of the candle at 79.44, and then subsequently has come this little bit of a pullback in the markets, taking us down to the cash close as of yesterday's session. So not much move expected at the start, at the top of the hour, but broadly speaking, holding on to what has been a record 24-hour market. Overnight in the Asia-Pacific session, as I said, the Emperor's Day holiday in the Japanese markets, meaning that there's no cash trading day today, but we've seen a loss of 1% in Singapore, and S&P ASX 200 in the Australian markets up almost half of 1%. Let's take a look at the 24-hour markets on the Japanese session today, because I wanted to highlight this new all-time record high that we had in the 24-hour markets in yesterday's session, having gained almost 19% on the year to date for the Nikkei 225, going up to 39,550. Remember, recently passing that record that it's been held on to since the beginning of 1989, and since then there has been this further push higher onto new record highs on the Japanese market. So when we see things return on Monday for the new cash session, widely expecting to see new record highs on that as well. Now let's take a look at the Wall Street close. Wow, what an interesting day yesterday. We saw gains across the board. We saw record highs for the Dow Industrials, record highs for the S&P 500, NASDAQ up by the widest margin we've seen on a single day's trade in so long. The markets, let me just quickly show you what's been happening on the US Tech 100, because interestingly enough, despite the fact we saw a big strong day yesterday, it wasn't an all-time record high, unlike the Dow and the S&P 500. What I do want to show you, though, is the stock of NVIDIA. NVDA is the ticker symbol. It's an all-sessions stock. And you can see this climb we saw yesterday to another new all-time record high in the stock at 798.92, adding $277 billion in value yesterday. This is the most single day's gain for any stock in value in stock market history. And it's brought the gains for the year in NVIDIA to date to $740 billion. Now, this takes its market capitalization to $1.94 trillion. Now, this is extended trade, and we went on beyond the point at which it closed out yesterday's cash session. Let me just show you what happened in the 1 hour charts yesterday. As at the close last night, that is where we were last night. So you can see we went on to score new higher highs in the post-market session. And for me, this indicates that we're going to see another strong start or another plus side start to NVIDIA. Some people saying after the earnings that we saw the last couple of days, we haven't yet seen the top. Certainly not the cream taken out of NVIDIA yet, and that is yet to come. as the company continues to benefit from the sale and excess production of these chips that power artificial intelligence for various things that we use right the way around the world. And NVIDIA has stolen a march on pretty much every other single company around in the space. Let me just show you what's been happening with the Dow. In fact, as of yesterday's close, we saw this market rise on the 24-hour session intraday to a new record high at 39,155. Like the European markets, a little bit of money taken off the table on the 24-hour markets in the session in today's trade. The S&P 500 rising to an all-time intraday record high at just 4.5 points shy of the 5,100 level. 5,087 is where we're trading at the moment, just a little bit on the way down. But this long-term uptrend still very much in place across the US markets. Let's take a look at some of the economic data out. We've seen out overnight. I want to begin first of all with the midnight release of the GfK consumer sentiment numbers coming through. British consumer sentiment falling for the first time in 4 months. GfK consumer confidence index dropping by 2 points to a -21 in February, below economists' forecasts, who had expected a small rise to a -18. The only component of the index not to fall was households' expectations for their personal finances over the coming year, which was unchanged at 0. Now, let me show you what's been happening on the markets, because, to be frank with you, not much. This is sterling against the US dollar. Basically, the story is we're holding on to the recent gains. Yesterday, we closed out at levels not seen since the 2nd of February. On sterling against the US dollar, and we are flat on that close at the moment at 126.61. The other aspect of this to take is what's happening with sterling against the euro. Just to show you what's been going on there as well, you can see exactly the same thing. Little doji style candle, no move on from the close, I should say, on the 24-hour markets yesterday. And the boring news doesn't stop there, unfortunately, because we've seen German GDP come through and no change. This was the final reading of fourth quarter growth rate. Final expectations for this coming through with a reading of a -0.3% Q on Q, in line with expectations for that. At 9 o'clock this morning, we got the German IFO, which could be of a bit more interest, I think. It's forecast to rise to 85.5 in February from 85.2 in the prior month. Yesterday, the IFO reading of the business climate in the German chemical industry stagnated at low levels in January. The value slipped to a -15.9 points, down from 15.4 in December. Companies rated their current business situation in the chemical sector at a -17.1 points, which is slightly worse than the previous month. Now, my question is on this, does this mean we could well get some downside, possibly the risk to that German IFO number out at 9 o'clock this morning? Let me show you what's happening with the euro dollar. Little change on from the close yesterday at 108.24. Now, which way do we go on this? It's difficult to know because the German economy is one of the underperformers across the European market. So the natural expectation is for it to continue to underperform. And if the risk is on the downside, we might get a little bit of money taken off the table for the euro dollar trade. But at the moment, as I say, we're holding on to where we were yesterday at 108.25. Now, if you're looking for a little bit of volatility to trade in the markets, so for the week starting Monday, the 26th of February, Wednesday brings the Kiwi interest rate decision, expected to leave rates on hold at 5.5%. That would be for the 5th straight meeting. But its last decision, which was on the 29th of November, the RBNZ surprised the market by signalling a willingness to increase interest rates once again if necessary. It indicated then that stronger than expected demand and wage growth were possible factors that could stall the progress on taming inflation. Now, the cross I want to take a look at on this is what's happening with the Kiwi against the Aussie. Now, this is the Australian dollar down against the Kiwi. The Kiwi very close to levels not seen since the 22nd of May last year. So strength for the New Zealand dollar. And this, if it continues with the rhetoric around hawkishness, then we could well end up seeing a break of this 105.60. Now, if you're short at 105.96, your stop would go above the 106.50 level up here, which is above recent price action. And if we get a candle close below the 105.60, you're then on the way down to this level down here, which were the lows that we had at 104.71 back in December the 16th, 2022. So that's the direction of travel. And that could well be where we see the direction. Since the last decision, inflation has eased slightly, but still too high for the RBNZ Governor, Adrian Orr. An RBNZ quarterly survey published recently as well shows that two-year inflation expectations rose to 3.2%. Previous estimate was 3%. It's unlikely, I suspect, we could well end up getting another interest rate rise at this stage from the RBNZ. But if they do, certainly we could well see this disappear below that line of support at 105.60. Certainly an interesting event to watch out for trading volatility. Let's move away from economies and take a look at what's happening with a couple of companies having reported earnings today. I want to begin first of all with Standard Chartered, the London-listed bank, which has more than 50% of its revenue coming through from the Chinese markets. Pre-tax profit rising 18% last year, but this was in line with the forecast, despite the fact it looked pretty strong. It took an $850 million impairment charge from its stake in the Chinese lender Bohai Bank. In terms of guidance, it expects income to grow between 5 and 7% between 2024 and 2026, as against 10% growth in 2023. So that's a drop down. It aims to increase returns on tangible equity, ROTE, steadily from the current level of 10% to 12% by 2026. It also announced to shareholders a $1 billion share buyback program and a 50% increase of its final dividend to 27 cents. Let's take a look at the share price. The stock will open at 606.1 in the London markets when trade gets underway at the top of the hour. Another stock to watch at the beginning of today's session is in the German markets. The German insurer Allianz coming out with its fourth quarter net profit, as against this time last year. Net attributable profit to shareholders was 2.15 billion euros compared with 1.1 billion this time last year. However, it fell short of the near 2.2 billion anticipated by the market. The strong showing in the fourth quarter helped the company lift its full year net profit by 33% to 8.5 billion. For the current year, Allianz sees operating profit between 13.8 and 15.8 billion. Previous estimates have been for 15.48 billion. So that is, I suggest, something particularly worrisome for investors, I suspect. Look at Allianz in the last few days. It's risen considerably on the markets. The reason why we've seen this rise on the session is that we've got this push higher on expectations for a hardening of insurance rates that we've had. Let me just take you back to where we were last at these levels. We've got to go all the way back to April 2002. It's the last time we were at these heady heights of the share price at 254.70. And if we do see a rise in shares, the area to beat is 25,600, which is the intraday highs that we saw in yesterday's session. Although I suspect there might be a little bit of a disappointment for investors at the start today because of the outlook for the company, which I think is a little bit softer than it has been in prior expectations. Let's take a look at what's happening on the commodity markets. I want to begin first of all with the price of oil. Yesterday afternoon, the EIA confirmed the rise in crude oil stocks flagged by the API earlier on in the week. Crude oil inventories increased by 3.5 million barrels. Gasoline stocks fell. Distillate stocks also on the way down. But in fact, what we've seen on the oil markets is not much move. In fact, we've been capped out by recent highs, which were the highs we saw here back on the 29th of January, when we saw the high at 78.87. Now, that was the high. We haven't beaten that this week. It's been bumping up against it above the 200-day moving average, but nothing has happened. Last Friday, just to quickly remind you, Baker Hughes' weekly rig count showed a decline total rigs to 621 last week from 623 in the previous week. And that is out and updated for you at 6 o'clock this evening, UK time. Back to the charts. Second day in a row of losses for the price of gold as the dollar's fall starts to peter out. And we've seen a little bit of money being taken off the table. We are $21 above the 2,000 level for the price of gold. Now, the price of Easter eggs are expected to rise this year. We've already seen the price in the shops gain, and we've seen shrinkflation take effect, where we've seen Easter eggs start to get smaller. They tend to keep the prices the same. The usual annual inflation is being trumped by a 100% rise in the price of the humble cocoa bean. Let's take a look at what's happening in terms of the move up on the chart, because it is quite startling what we've seen in terms of the moves. Last year, London cocoa lifted by a margin of 72.5%. This year so far, after just 2 months, and we're not even at the end of the second month yet, we're up almost 48%. Now, Ghana's cocoa output for the 2023-24 season is expected to be almost 40% below a target of 820,000 metric tons, according to two sources from the country's sector regulator. Strong seasonal winds and a lack of rain are among the main factors. However, adverse weather is not the only reason for this move up. You can see this tremendous gain that we've seen in the price of cocoa. Ghana says the cocoa swollen shoot virus, which causes yields to drop and kills cocoa trees, has wiped off around about 500,000 hectares of farmlands. Ghana is the world's second cocoa producer behind Ivory Coast. Ivory Coast, which said earlier this week that cocoa arrivals at its ports were down 32% in February year on year. But as I said at the top, in reality, what's likely to happen is that marketing departments for Easter eggs suggest to the manufacturers that they shrink the size of the Easter egg to try and contain the increase in prices they're having to deal with. So in other words, shrinkflation taking effect on Easter eggs this year. So expect your Easter egg to be a little smaller this year in 2024. That's it. Also, Alex, back at 10:30.